because I'm looking at the stock already down 6% this morning at the open. This following yesterday's 4% decline. It's really feeling the pain today, and of course on the back of that fall in the spot iron ore price overnight.
It is about iron ore prices at the moment, and we saw a drop of 2.5% in the spot iron ore prices overnight. So no doubt the iron ore miners are going to be feeling some pain. And in regards to the sale of that power plant for Fortescue, I think this has bigger implications than just the iron ore miners. We've seen some of the mining services companies being sold off very heavily on fears that the FY14 order book onwards may not look so healthy as we have seen in FY12 and FY13. The next 12 to 18 months still look very strong for a lot of the mining service providers, but it's after that they really need to get some contracts flowing through, and there's some doubt over that. And not only that, one of the things we have seen in Western Australia is a very high gas price, and that's to power along some of these iron ore projects. Some of those gas explorers, so those oil and gas explorers, which aren't actually in production at the moment, would be suffering as well, because as prices come down, we know that capital expenditure is put on hold and deferred, and we do see less of a demand for gas to fire along these projects as well. So we are seeing not only the iron ore players being impacted by the softness in iron ore prices, but the mining service companies and also some of the exploration in terms of oil and gas in that WA state, where gas has been a very attractive asset to help power along a lot of those growth projects in the Pilbara region.
Goodman Fielder might see some weakness today. This is the food manufacturer on reports that Wilmar might be selling a stake in the business.
There's been a lot of speculation around Goodman Fielder because Wilmar International took a 10.1% stake in the business, but now reports from the Australian Financial Review that it may be looking at offloading its stake, and a big part of it is because Wilmar was interested in the oils business called Integro that Goodman Fielder owned. But of course Goodman Fielder in recent days has actually sold that oil business to Grain Corp, so it looks like Wilmar has missed out there. They do have a 10.1% stake in Goodman Fielder, and we could see a sell down of that stake, adding to weakness in Goodman Fielder's share price. Now, in recent days, we have seen Goodman Fielder coming out to indicate that they may be looking at closing down up to 18 out of their 53 plants, and they are looking at a bit of a turnaround plan. They're hoping to cut some of those underperforming businesses and non-profitable areas. And this is a company that has been under a fair bit of management turnover, no dividends being paid, and of course raw material costs being on the rise. We have a look at a loaf of bread, about 30% of the cost of producing that raw material costs, and we've seen that rising and adding to the pressures of the supermarket wars that we're seeing and the fight for that private label market. So Goodman Fielder trying to look at some cost savings and a turnaround plan. It is looking at a return on capital employed of about 13 to 15% by 2015. But in the short term, if we do see Wilmar offloading this stake, then we could see some extra weakness in Goodman Fielder's share price.